Now, to help us unpack the economic implications of the proposed reforms and to assess their practicality in the current financial climate, we are now joined by Economist Mally Likukela. Thank you so much for being here.
Thank you. Always a pleasure being here.
Well, first of all, the Bank of Namibia describes the financial sector as stable. But when nearly half of the population, especially civil servants, are drowning in debt, do you think that this is a stability, or is this stability working for ordinary Namibians?
Well, I think it's a very important question to begin the conversation with, but it's also very important to put the definition of the Bank of Namibia in context.
Okay.
The definition of the Bank of Namibia, when it refers to financial system stability, it probably refers to the things that are within their mandate.
Right.
The definition that they use, the Bank of Namibia, is to say that financial system stability refers to the absence of any macroeconomic disruption in the system, or you can say the resilience of the financial system from the internal and external financial shocks. Now, if you look at this definition, you can clearly see that there's very little emphasis on the lived experience of the household that are in debt. As long as the system, as the Bank of Namibia defines it, is stable and is resilient, it's able to withstand the shocks, to them, the financial system is stable. But if you bring in the aspect of some of the key players, which are the household that are in debt, their cries and their struggle are not featured in that definition. So it's fair for them to say it is stable. But when you bring in that aspect, one begins to question and wonder whether that definition really pertains to the stability for everyone. So in my view, I think that in terms of the bank's definition, looking at the parameters that they look, yes, it is stable, but it's not when you bring in the aspect of the severity of the impact of debt for the household, who are also the stakeholder in the system.
Now, do you believe that our current financial system is structurally fair to the low-income earners and also to vulnerable households?
A financial system like this of Namibia is very complicated.
Right.
What I mean is that the financial system of Namibia is, number one, is very small and is very open to external factors which are keeping the financial players very much vulnerable. Now, the most important vulnerable people in any system are those that are at the mercy of the key stakeholders. And in this particular case, the household that are in debt are very much vulnerable. And unless deliberate efforts are made to protect them, their vulnerability will continue and they will not really feel included in the financial prosperity of the system. So in my view, I think that this is a very important conversation we need to have, because there are various indicators of vulnerability that are right in our face to indicate, to say that in as much as our financial system is very stable, is lauded upon, I mean, everyone is talking about how resilient the Namibian banking sector is, the Namibian financial sector is, but the people that are forming component of it are suffering, then that definition really needs to be questioned.
So, bringing me to my next question, I mean, formal lenders are legally operating with high interest rates. Some informal lenders reportedly charge over 50%. Do you believe that interest rates in Namibia are humane, and are they sustainable at all?
Well, interest rates are not supposed to be humane. Interest rates are prices of business. So the human aspect must be taken out, because if you bring the human aspect, then it's no longer business. Okay, that's another way of putting it. But what is happening is that prices or interest rates, they signal the value of the commodity. Now, in this particular instance, the interest rate that are being charged to the vulnerable or to the lower income earners are definitely not conducive, because we can see the high number of defaults, and we can see the cries, we can hear their cries. So one can, yes, say they are inhumane, but the fact of the matter is that the market has got a way of controlling itself. And when the market is left to control itself, the less vulnerable continue to suffer or tend to suffer. And that's why we have regulators like Bank of Namibia, like NAMFISA, to come in and sort of address the market inefficiency, to correct the market inefficiency, not to come and control the market, but to correct the inefficiencies that are within the market, because inherently, even markets are also inefficient at some stage. And one of the inefficiencies we can see is the high interest rates that are being charged to the lower income earners.
Right. So members of parliament proposed the amendment of the Banking Institutions Act so that it can cap interest rates. Do you think that the Bank of Namibia is open to introducing such caps? And why and why not?
Well, the Bank of Namibia is well within their mandate. If I'm not mistaken, I think it's Chapter 6 or Chapter 9 of the Bank of Namibia Act 2020 clearly gives the Bank of Namibia the mandate to exercise macroeconomic prudential oversight. These are to put measures in place to make sure that the financial sector players do not recklessly conduct their business. You cannot overlend to somebody that you know that they won't be able to pay back. You cannot recklessly conduct your business. The Bank of Namibia has got the mandate to do that. And also at the same time, if the Bank of Namibia realizes that the other part of the market is suffering, they can also come in and introduce measures that will improve the situation. In this particular case, the members of parliament or the legislature are calling for these kind of reforms because they can clearly see the impact that is on the members of society. So the bank can come up with measures, but these measures must be in such a way that they do not control or they don't interfere with the operation of the market, because if the Bank of Namibia comes in and act on emotion or on humane basis, they might tend to interfere with the operation of the market. When you interfere with the operation, so the Bank of Namibia can come in nicely with their measures that will not only put caps, but will put measures to make sure that the banks do not overcharge, and also to put measures in place that lenders also are protected and they are also empowered when they conduct business with the commercial banks, which tend to be much, much stronger than the lenders, than the borrowers. So yes, the honorable member who introduced the motion is well within their rights, and also the Bank of Namibia is well positioned to come up with measures. It can be done.
So the draft regulations on fees and charges have been pending for some time now. What delay, or what is the delaying enforcement, if I can put it that way, and will there be any real consequences for violations?
So there is the process of making laws in Namibia is quite lengthy, because there are a number of stages and procedures that need to be followed. And so the bill to that effect is also still underway. I think the National Assembly would be in a very best position to speak to that. But what I can only say is that once that bill has been passed, once that law has been made, enforcement will not be a problem, because once a bill is made, there are also regulations and standards that are in place. And Bank of Namibia and other stakeholders are well capacitated to enforce those measures such that consumers or the business or the sector at large is protected.
So informal and digital lenders are operating outside the Bank of Namibia's jurisdiction, yet they are actively lending. Do you think that there is a need for the Bank of Namibia to expand its regulatory powers to include many of these players?
Well, I think, again, also the Bank of Namibia would be better suited to respond to that. But what I know is that the Bank of Namibia has got an overall mandate over the sector, over the system. So this basically means that whether you are a cryptocurrency or whether you are an exchange rate trader, whatever you are, as long as you are dealing with a product that is under the Bank of Namibia, you are well under the Bank of Namibia supervision and regulation. And so there is no really need to, the Bank of Namibia does not need to expand its mandate. The mandate is already there. They only need to introduce these measures within their mandate to start enforcing and regulating these kind of new businesses. Of course, we must understand that these new businesses that are coming with IT, with technology, they move quite fast, and the lawmaking is a bit slow compared to the development in the IT industry. But Bank of Namibia always tries to do its best to catch up, and I am sure that they are doing something about it. But again, it's not only Bank of Namibia when it comes to lending, there's also NAMFISA. I think the collective effort of these two institutions, and as we have seen with their regular monitoring and the reporting of the financial sector strengths and weaknesses, I'm quite sure that this is something that can be done easily, and I'm sure they are doing something about it.
Now, there's another proposal, that of creating a debt relief program for civil servants as well as for low-income households. From your point of view and from your perspective, is this feasible at all?
Yes, it is feasible. I think there are many ways that government can protect consumers. We have, in other countries, we have Consumer Protection Act, whereby consumers are protected by their lenders when it comes to shocks or vulnerabilities. So the Bank of Namibia, together with NAMFISA, can also do the same. The measures must just not make sure that they do not interfere with the operation of the market. And this is where then consultation comes into place. But together with the legislature, they can come up with very nice laws that make sure that they regulate the operation of the sector, not to discriminate or to harm another player in the process. The Bank of Namibia has got mechanism in place, even as we speak, where aggrieved and state their case. There are in place measures to redress any issues between a borrower and the lender. So based on that, I think a more formidable and workable mechanism can be built, and this is what needs to be to actually happen.
Now let's talk about the Velva Fund. Could it realistically be used to support such a relief initiative, and what are the risks or the benefits that you see in it?
In my view, I think the Velva Fund is a very important economic tool that can be used to do a lot of things. My only fear and worry and concern is that the Velva Fund's mandate or the Velva Fund's objectives for the future. The problem that we want to address are current problems. And if we use the tool that is meant to protect the future to address current problem, we might somehow miss the whole point. So I would say that I think that proposal needs to be looked at it carefully, because it has got implication on the objective of the Velva Fund. See, the Velva Fund is a fund that's supposed to secure the future generations' livelihood and prosperity. And so whatever needs to happen to it must make sure that the primary beneficiary is in future, not currently. The situation we're trying to address now, these are current issues, and to use a tool for the future to address it right now or currently, for me, somehow it needs to be relooked. I'm not very much in support of that unless the whole process is looked at so that we do not defeat the purpose of the tool, because the Velva Fund is a tool for the future.
So currently, the Bank of Namibia, or should I say, does the Bank of Namibia consider household debt levels when it is assessing financial stability? And do you think that household debt should be sustainably a more central part of macro-prudential oversight?
Yes, the Bank of Namibia does consider all those parameters. If you look, if you look at their financial stability report, they look at all the risks that emanates from across the sector, from the household, from the corporate. The Bank of Namibia assesses the components of debt. Is it mortgage? Is it car loans? Is it overdraft? All of those are assessed to determine whether they are building up towards a vulnerable or towards a crisis. So the Bank of Namibia does actually consider all of those, and they reform or they attune their policies to prevent any future occurrence of a crisis as emanating from mortgage. So yes, definitely the bank does look at that. And together with the NAMFISA, because they conduct the financial system assessment together, the NAMFISA looking at the non-banking financial institutions like the lenders. Your micro lenders fall under the ambit of NAMFISA, by the way. So the Bank of Namibia looks at the lending that's happening in the banking sector, and NAMFISA looks at the lending that's happening in the non-banking sector, like your micro lending. And together, they assess the market and conclude and make recommendations to prevent any vulnerability, to prevent any disruption, to make sure that, in fact, to make sure that the system is more resilient. So they do consider that, definitely.
And perhaps just in closing, the African Development Bank argues that international financial systems often fail countries like Namibia by locking us into debt cycles. Now, do you think or do you agree that Namibia's fixed exchange rate regime may limit our policy flexibility, perhaps?
In terms of using the exchange rate policy to address the issue of debt, yes, one might really say that, yes, I think there is the scope for improvement. Our exchange rate peg to South Africa has got a number of benefits, and it also has got a number of costs. One of the biggest costs is to use our own economic policies to address our own situations. And sometimes the exchange rate policy or exchange rate regime across the border is not conducive for us to use our own policies. And so, yes, to an extent, I agree with the Africa Development Bank when they say that the policy sometimes really makes our own policy ineffective to address or to respond to issues that are facing us currently. But to bring in the peg aspect, yes, there are some challenges, but over and above, if one look at the cost-benefit analysis that was done some time ago, one can see that in as much as the peg is not really delivering the result that it ought to do, somehow it is also helping to stabilize the economy in areas that the economy itself cannot sustain. So when it comes to debt, it's a multifaceted issue, and the exchange rate peg should not be used as a standalone tool. It must be a tool together with many other tools for us to respond to the crisis that is looming as far as debt is concerned.
Mm-hmm. And let me just give you a minute or two for you to summarize or to highlight what we have been discussing today.
Yeah, so in fact, there is a clear sign that the debt situation in Namibia, especially for household, is getting it's getting towards a stage where it might not be manageable. And if this situation occur, it's going to have implication to the entire economy, because then it's going to disrupt the smooth operation of the economy. And therefore, the lawmakers are beginning to look at this, and they are raising concern, and they are suggesting reforms. And I think it's high time that the key stakeholders, such as Bank of Namibia and AMFISA, listen to the concern of the lawmakers and do something about it, because definitely if the situation is not addressed, it will have implication for the future. And the financial sector being a key economic sector in the economy, we really need to enhance its resilience. We know that Namibia's financial sector has been lauded by a lot of people internationally as the most resilient, but that is only in as far as the financial system is defined. We have low-income earners, we have the teachers, like the lawmaker who introduced the motion. She highlighted the teachers, the nurses, who have very limited options of financial rescue, who are pinned to the corner. And this situation locks them and their family and their intermediate families in the perpetual debt cycle. And so for me, I do agree with the lawmaker who made a motion that it's about time that the whole system need to be relooked at, so that the vulnerable people are protected.